We've got Leif Eskesen, who's Chief Economist for India and the ASEAN region at HSBC. He joins us right here in the studio. Leif, to begin with, we've got the February IIP number coming out tomorrow. What's the HSBC expectation?
Well, we are slightly above the consensus. We have a 7.1% year-on-year growth. I mean, there's a base effect that's kicking in. So even though we have a deceleration in terms of manufacturing month on month, the base from last year was relatively low, so that's what's keeping it up, basically. There will also be some deceleration when it comes by use. I mean, we had a very rapid increase on the consumer segment last time around in sequential terms. There'll be some slowdown on that front sequentially, but again, the base, as I said, last year is pretty low, and that's why we see the annual growth number holding up relatively well.
Leif, core inflation also is emerging as one of the key threats now in FY13, as most of the economists had predicted. Do you think that this is going to remain as big a threat as will the rising oil prices for FY13 for the RBI?
It is, and they both actually go hand in hand. The concern is right now that, I mean, core inflation pressures are still in place. I mean, there'll be some deceleration partly for base effects here in March that could take the number down a little bit. But overall, core inflation prices are still high. The reason for that is that despite the slowdown we've seen in growth in India, potential growth has also declined. So that means that even though growth is slowing, the slack that's left in the economy is not very high, not really existing. You still have very tight capacity. So you see backlogs of work are still increasing. Supply delivery times are still lengthening. And you also have the capacity utilization measures are also relatively high. So that suggests that even with a slowdown, core inflation prices will still be there, and high oil prices, they build into inflation expectations. Second order impact could then start to increase core inflation prices as well. So inflation is very much a concern still.
Sure. Now, Leif, you made the point about core inflation, the point about manufacturing order backlogs, I think at a record high at present. Does this go back to the issue of supply side constraints that we constantly speak of? And yes, at HSBC, do you believe you are beginning to see enough traction on the part of the government in terms of addressing that, or would you say you're still disappointed?
We're still disappointed. We think more progress needs to be made in terms of rolling out structural reform. I think it's key to understand exactly both the growth and inflation outlook from that perspective. To improve the growth-inflation trade-off in India's economy is absolutely crucial that structural reforms that improve the supply side of the economy are being rolled out faster, implemented faster. Initially, it would have more of an impact on sentiments, improve investments. Eventually, it would have more of a real impact in terms of actually increasing the potential growth rate of the economy. So it's really key to look more on that front of the policy side to support growth, as opposed to expecting that cuts in policy rates will do the trick.
Well, staying with that question, given that next week we will be having the monetary policy, most of the bankers and economists we've been speaking to have now given up hopes of a repo rate cut. What is your expectation as to what the RBI is likely to do?
It's going to be a close call, but we still think it's hard to make a case for a rate cut. So I will be in the camp that they're probably going to pause. The reason why I'm saying that, if you look at the global backdrop, broadly unchanged relative to last time round. Domestically, in terms of economic activity, PMI has come off a little bit in March, but overall the picture is that the final quarter of the fiscal is improving over the third quarter. On the inflation side, unfortunately, it looks like inflation risks have actually increased since last time around. Oil prices are still relatively high. The exchange rate has actually depreciated since then, so that adds to inflation pressures. There's concern, of course, about the wide current account deficit. In addition to that, of course, you had fiscal tightening on paper, and a budget that was presented that targeted a 5.1% deficit. It might not be achieved fully, so I think in terms of the fiscal stance, it may not prove as tight as you would want it to be. And then importantly, as we discussed earlier, the progress on structural reform, which is key for both growth and inflation, has not really been forthcoming since last time around. So there need to be some more assurances on that front, and more, I would say, sustainable decline in inflation pressures and a reduction in inflation risks before RBI can cut with comfort and with credibility.
Sure. Now, Leif, we did speak about the fact that bankers are beginning to give up hopes of a policy rate cut. The expectation is focused almost entirely on the liquidity picture.
Yes.
Expectations of as high as a 75 basis point cut coming on the cash reserve ratio next week. Now, do you believe that even if the CRR were cut meaningfully by maybe 50 to 75 basis points, the structural problem remains, because we are beginning to see a trend re-emerge where deposit growth is beginning to lag credit growth, which in some sense is leading to a structural liquidity deficit within the system. So do you believe a CRR cut is actually just going to be temporary relief?
I mean, it will provide sort of permanent liquidity injection, so it will have implications and it will help. Some of the liquidity deficit we're seeing now is also seasonal in nature. There will be some easing of the liquidity pressures on that front as well. But it's true that other things have to happen. You need to, of course, see more progress in terms of ensuring that the current account deficit doesn't widen too much. So the important thing here is to effectively see more tightness in the macro policies. Fiscal policy, they have to reduce the borrowing requirement there as well. That's also something that's squeezing liquidity at the moment. So there need to be progress on other policy fronts too before we can have a more sustained, I would say, decline in the liquidity deficit.
So you also have the global macroeconomic outlook, which seems to be fairly bleak. We've been talking about rising oil prices. In addition to that, there are large expectations that the rupee may revisit those levels that it saw in November. Should that happen, do you think that the liquidity picture will worsen as the RBI is forced to intervene again in the currency markets?
Yeah, it most likely will. I mean, they have no because they have to intervene. They cannot necessarily stabilize these interventions immediately. So from that perspective, that could have implications on the liquidity deficit as well. So that's why it's so important, exactly considering the weak economic backdrop, the high risk aversion among investors, that the macroeconomic stability is safeguarded through demand management policies, keeping a focus on keeping things tight, reducing that current account deficit by actually containing domestic demand.
Sure. And finally, what do you believe it's going to take for India to do in order for foreign investors' view on the country to change for the better?
I think foreigners' view on the medium-term growth perspectives and medium-term growth story in India is still quite favorable. That hasn't been completely shaken, but I think in the short term, clearly there needs to be more clarity on the policy side. We have a couple of issues out right now that has, in a sense, worried investors about what their position will be if they invest in India. So there needs to be more clarity on the policy front, and clearly there needs to be more progress in terms of actual policy reforms being implemented. As I said earlier, it will take time for these reforms to get fully implemented and rolled out, but at least a signal that progress is being made on that front on key areas would help in terms of fostering foreign investor sentiment more favorably towards India.
Leif Eskesen, it was a pleasure having you. Thanks very much for joining in.